It's time for hot picks in aerospace and defense. That's on the menu today. Our guest has ITT as her top selection. She thinks this company will gain from its acquisition of an equipment maker called SPX Flow. We're joined by Evelyn Chow, portfolio manager at Neuberger Berman. Thank you very much indeed for joining us, Evelyn.
Thank you, Andrew. It's great to be here. In this really volatile time where we've seen drawdowns in TMT, a lot of macro cross currents, I think one area that really stands out to me as a global equity PM is, in fact, industrials, and specifically aerospace and defense. So you might be surprised to know over the last 12 months, industrials has actually outperformed the XLI by over 1,000 bips. And that's been due to a confluence of factors, including better than expected top line growth, a really, really capable navigation of the tariff environment, a broadening of the cyclical recovery trade, and last but not least, extremely tight supply and demand dynamics, especially within commercial aerospace.
Can I cut you off? Sorry, Evelyn, I wanted to cut you off there because I got confused by something you said. XLI is an ETF that tracks industrial stocks in the United States. That's what you mean? And
that's exactly right.
And sorry, what did you say about the performance of it?
It has outperformed the S&P by over 1,000 bips in the last 12 months.
Thank you. Sorry to cut you off there, Evelyn. We're tight for time, and I'm cutting you off again. Could you tell us about ITT, please? What do they do? What attracts you to that stock?
Yeah, ITT is not a household name, but it is a core portfolio holding. This is a mid-cap compounder, dominant in industrial pumps, aerospace connectors, and defense electronics. I see a mid-teens earnings algorithm over the next few years, both on the back of their organic upside surprise, but also, as you noted, Andrew, due to their impending acquisition of SPX Flow, which will make them a dominant player in the flow control and process markets.
And tell us about, how much of their business would be defense then? Is it fair to call it a defense stock?
I would say aerospace and defense probably makes up somewhere around 10 to 15% of current revenue base, but accelerating at a very high level. They're levered to the wide-body OE recovery as well as defense spending accelerating, not just in the U.S., but all around the world.
A better name in defense, Boeing, of course, a huge civil business, but tell us about their defense franchise and what attracts you to the name, or is it just the broad aerospace component here?
Yeah, I really think it's both, Andrew. So, you correctly noted Boeing has a great defense business. Boeing Defense has actually seen a great step down in the amount of charges it's taken over the last few years. That's a business that we expect to be well on the path to break even and eventually even better margins over time. I would say the call on Boeing really stems from the fact that post-COVID, we are still seeing that original equipment recovery. A lot of planes are in backlog but still need to be delivered. I think Boeing is, finally reaching cruising altitude. A few key numbers to frame that. I think we should think about $13 billion of free cash flow within 3 years, $15 billion of free cash flow within 5 years. That's off of around low single-digit billion free cash flow today. And so I really see this great acceleration in the free cash flow ramp of this company, stemming not just from its position in defense, but also its position in commercial OE as well as services.
And then finally, a name that is huge in defense, Lockheed Martin. What would be your bull case on this stock?
Absolutely. I would say defense primes are ready for prime time. Defense spending accelerates not just because of geopolitical conflict. I think there's a recognition that we are entering really a new paradigm of deterrence. You see that reflected in the fact that we're talking about a $1.5 trillion budget in the U.S. Over in Japan, we just saw a landslide supermajority victory for the LDP, a party where the PM is very, very supportive of accelerating defense spend as well. And that doesn't even capture what's beginning to happen with NATO countries, especially Germany and Poland, that are really ramping their defense spending. I would say Lockheed represents a bellwether that had a few missteps over the course of 2025, but I really think this is the year where Lockheed is regaining its mojo. I see upside revision to numbers, backstopped by a very, very strong franchise in missile interceptor demand. You've seen a couple of framework agreements from the U.S. government to accelerate production capacity in that area. And I think Lockheed is poised to benefit in a really material way.
It's interesting. Yeah, just looking at their website, and they highlight the anti-missile missiles, but also unmanned or automatic autonomous maritime vehicles as well, ships that just sail under their own. Some of them have sails, it looks like.
It's a whole new world, Andrew, and I think you see the primes really investing in a lot of innovation in this area, really as a reflection of the fact that defense tech is becoming much broader, much more sophisticated. These are much more elegant solutions to deterrence than we've ever seen before.
It's interesting, isn't it, finally, that just the Ukraine war, tragic as it is, we've seen the emergence of relatively cheap drones as an important weapon on the battlefield.
Absolutely. I think, unmanned and autonomous represents a really, really critical area of investment, not just for the U.S., but for the whole world. That will still be complemented by the fact that we will need very complex systems that are manned in order to mount a sufficient defense in all theaters of potential deterrence in wartime.
Thank you very much. Really appreciate it, Evelyn. Evelyn Chow, Portfolio Manager at Neuberger Berman.